Good evening, everybody, and welcome to our market review webinar. Guys, how are we all doing? I hope we've had a fantastic bank holiday weekend and ready to for another profitable week in the markets. Guys, can I just get a sound check and a visual check, please? Can you all hear my voice loud and clear? Can you all see my screen? Just pop a yes in the box if that's coming through nice and clear. The Wi-Fi has been a little bit up and down over the past week, so just want to make sure that's all coming through loud and clear. Fantastic, guys. So how are we all doing? How have we got on in the markets so far this week? It's a brilliant start to the week yesterday from the signals in the groups, and we're looking to continue that momentum for the rest of the week. Perfect. Great to hear, guys. Fantastic. So, guys, what has happened since I saw you all last week? We've had a few events that have taken place in the markets, and we're going to cover those events in a little bit of detail this evening before we look to the week ahead. We have a few nice opportunities which are starting to line up. Not quite ready for us to act upon just yet, but we're going to look to monitor these positions, and once they meet the criteria, then we'll be able to place our positions. But nonetheless, of course, we will still go over those positions in good detail this evening. So, guys, let's get started. Let's take a look at last week's fundamentals. Of course, well, before we do that, we did have a position that we planned last week on the CAD yen. So let's review that quickly and then take a look to last week's fundamentals. So last week, guys, we went down and we broke down a potential long from the CAD yen. This is what we were looking at here. This price behavior here last week, we saw a good bullish move up to the 82.60s. And we had a very nice price structure that was forming down at these lows. So we were looking for the opportunity on the roll reversal here around the 82.06, intraday resistance level, previous intraday resistance level, on the top of this this market structure here. So we were looking to take advantage of this roll reversal. However, there was a lot of selling pressure, huge selling momentum that came into the market. And unfortunately, we had that change in market bias, and it wasn't long before we saw the 81.70 significant price level met. So unfortunately, this didn't meet the expectation. The sellers came in quite hard over the CAD yen over last week, and this is looking to continue for the week ahead. I mean, we have where are we? We have this support area down here, which we have just broken through and retested that as resistance. So I would expect to see lower prices, and ultimately I would expect to see these lows broken over tonight's Asian market session or into tomorrow. Of course, we do have major fundamentals expected this week for the Canadian dollar. We have the Bank of Canada interest rate decision. We're not expecting any changes there. I believe the rate's about 1.75% at present, and I believe that is expected to change. But we'll take a look at that in a moment. So unfortunately, we had a change of sentiment within the CAD yen, and this saw our position stop out for a loss unfortunately. So not a problem. It was a risk managed loss. So we dust ourselves off and we go again. So guys, does anybody have any questions about the position that we planned last week on the CAD yen? If you do have any questions, just pop those into the box quickly, and we can go through those before we move on. And if you don't have any questions, not to worry. We'll take a look at last week's fundamentals before looking to the week ahead. Okay, superb, superb. As always, guys, if you do have any questions and you do think of anything through the webinar, please don't hesitate to pop that into the question box, and we can go through that together. So, looking to last week, guys, since I saw you all last. Starting, let's go from the Wednesday. Oh, well, we did have retail sales quarter on quarter for the New Zealand dollar, slightly better than expected, but still a sharp fall from that previous figure. However, we did speak about this previous figure and said that this was likely, you know, sort of a little bit of an anomaly. You know, given prices have been pretty up and down, but we're starting to see a little bit more stability coming back into these retail sales figures quarter on quarter. Oh, apologies, guys. Here we go. Get rid of that. Speed up the Wi-Fi a little bit. There we go. So moving into Wednesday, we started off with an announcement from ECB President Mario Draghi. He was due to speak at the European Central Bank colloquium, Monetary Policy in an Incomplete Monetary Union in Frankfurt. So Mario Draghi was due to speak at an event taking place within Frankfurt on Monday. In the early hours of Wednesday morning, just after the open of the UK and Euro market session. Didn't really see anything major spoken by Mario Draghi at this event. Remember, as we've spoken about, when it's probable that central bank governors will speak about monetary policy, it tends to be, you know, at those quarterly central bank events, or the monthly or quarterly central bank events. Something like this, where they're speaking about monetary policy at an event in Frankfurt, it's not probable that they're going to release new information to the markets. So, you know, any change in monetary policy is expected to come from those major scheduled announcements. So we didn't really expect anything major here for the euro. And in turn, we didn't really see any major volatility. So, you know, played out as expected on Wednesday morning for the euro. Looking at inflation figures year on year for the pound, this was expected to climb up ever so slightly from previous figures at 1.9 to they forecasted at 2.2%. Now, we have been averaging around 1.92% since the start of 2019, as you can see here. You know, the average figures we're talking about 1.9 to 2%, and this is the central bank's mandate from government. They must target inflation, or the target for inflation is set at 2%, and the central bank must endeavour to, you know, the central bank must work and put measures in place to keep inflation on target, to keep inflation consistent. And so far this year, we have seen inflation year-on-year figures coming in very consistent towards that 2% target. So although we did see, figures coming in at 2.1%, just under that 2.2% figure, it's still, on a macro perspective, it's still pretty good data there for the pound. Just given back in 2017, we saw inflation figures spiraling past that 2% up to the 3%, moving towards 3.5% year on year. So, the actions that the central bank has taken, Governor Carney has taken at the Bank of England, have had the desired effect, and we're starting to see inflation coming back down to a more consistent level on the macro picture. So although we just missed out on our forecast, it's still some positive data on the macro picture. So moving into Wednesday afternoon, we had core retail sales month on month for the Canadian dollar. This was much better than expected, coming in at 1.7%, well up from the 0.8% forecast. However, the buying pressure that entered the market off of the back of this data release, the market participants were unable to sustain that rally to the upside. And of course, as we've seen with Canadian dollar pairings over the latter end of last week, they were pretty bearish for the Canadian dollar. So in spite of this positive positive core retail sales data and positive retail sales month on month, we saw the Canadian dollar buyers unable to continue that rally to the upside. So finishing off on Wednesday evening, we had the big one. We had FOMC meeting minutes for the US dollar. Now, we mentioned this last week. We looked at this event as a potential event to create a lot of volatility within foreign exchange markets, especially over the US dollar, and of course the safe haven assets as well, moving into gold, silver, Japanese yen and the Swiss franc. So there was the potential for major volatility off of the back of this fundamental event. But what we've seen is a little bit of consistency now coming from the Federal Reserve, and stating that, it was a pretty dovish statement, saying that, as they're still not planning on raising interest rates at present in the near future, because of course economic data for the US dollar has still been pretty poor and inconsistent. So until we start to see that consistency with economic data on a macro scale, it's unlikely that we're going to see any increase in interest rates with the Fed from the Federal Reserve. Really, given the strength of the data coming out for the US dollar at present, it wouldn't be surprising to see them, to start to maybe talk about dropping interest rates by 25 basis points, just to ensure that the economic growth doesn't start to slow down. So we could start to see maybe in a few months from now, if we don't see that that economic data start to pick up from the US, maybe in September time we start to see the FOMC, the Federal Reserve, talking about lowering interest rates by 25 basis points. So wasn't really anything too positive there for the US dollar. It's just something that we're going to have to monitor over the coming weeks. to really understand the FOMC's position on the current monetary policy. As mentioned, data just isn't good enough, and if we start to see that consistency in bearish data, then the likelihood is, we will see a decrease in the federal funds rate. If, however, we start to see positive data start being pieced together over the coming months, then maybe, come September, they might start to say that the US economy is, back where it should be and starting now to meet forecasts. So, they're not looking to lower interest rates, looking to maintain current levels. So it's, it really is quite data dependent, I think, moving forward with the US dollar. Moving into Thursday, guys. Thursday was quite a lively day for economic data. We had multiple data across the Eurozone. French flash services, PMI, German flash manufacturing, and German flash services. Well, as mentioned, guys, you know where my attention has been with this cluster of data. It's been with the German flash manufacturing PMI data. We've seen, again, now, just about now, we've seen, again, continual declines month on month. Now, for the past 3 months, we're looking 40... there we go. So 40, that was even actually revised. Oh no, it was revised down. So we have started to see a slight increase from these figures. Previous figure was 44.7. However, that was revised down to 44.1. These are terrible figures. These figures came in at 44.5, so we started to see a slight pickup. But let me paint the picture for you on the macro picture. Let's look from around November, December 2017. Since these highs sort of in December 2017 at around 63.3, we've seen continual declines month on month now for, we're looking for about 18 months, for a very long time. And not only that, we've seen this data fall from those highs at around 63. We've seen it fall below 50, which is indicating industry contraction. So above 50 indicates industry expansion and industry expansion within flash manufacturing sector. Below 50 indicates contraction. And what we've seen now is throughout 2019, the German flash manufacturing industry has been in contraction, and this is continually looking worse and worse. And I really do think this is going to start to heavily weigh down on the German economy, and we could see this push the German economy into a recession. So this data has, it's kind of surprised me, really. It's kind of surprised me that given how strong manufacturing is in Germany, that these figures are so bad. So I think there is more potential for a downside euro moving on, and that's one of the positions we're actually going to take a look at moving into the week ahead. So across the board, French flash services better than expected, just staying above that 50 level in industry expansion. However, the flash manufacturing PMI data for the German economy, again, pretty disappointing indeed. Flash services PMI coming out on forecast, but really, the flash manufacturing industry or flash manufacturing sector is a much larger sector to the German economy than flash services. So something to keep an eye on there, guys. You know, we've been in industry contraction now for the entirety of 2019. I think this is going to really start to weigh down on the German economy. Again, some positive data coming out for the pound sterling. Friday morning, we had retail sales month on month coming in just above estimate. The estimate, the forecast was minus 0.3%. Figures coming in at bang on 0%. So the previous figures were actually revised up from 1.1 to 1.2%. And again, you know, guys, we've been speaking over the past few weeks now how consistent the the pound data has been, regardless of this Brexit situation that's taking place. Of course, we've seen that within manufacturing production month on month, but you know, we can put that towards the weaker pound. We can see that with the weaker pound. The weaker pound is going to make our services, our products more attractive to foreign investors. So, you know, we expect to see the manufacturing production increase, but you know, retail sales there really been pretty consistent throughout 2019, and that continued Friday morning. Core durable goods orders month on month in the afternoon for the US dollar came in at 0%, just under forecast, and again pretty disappointing data there for the US dollar, although it only came in just under, you know, it was only just under forecast. If we look at the figures, you know, now over the past few months, they've been pretty uninspiring, and you know, the average, you know, from December, it has been pretty much 0.1. So it's a pretty weak figure. Oh, sorry, these figures have even been, you know, revised down most of the time. So, you know, there's even worse than expected. So, you know, this is what I mean, guys. The data for the US dollar has been fairly bleak moving forward. You know, throughout 2019, we're yet to see the US economy piece together some consistent positive data. And until we do that, it makes it difficult for me to look to long the US dollar on a macro basis. So guys, we had a big one over the weekend. We had the European parliamentary elections, and although this didn't provide too much volatility for the markets, it was quite an interesting event to take place indeed. So what we've had is quite a surprise throughout Europe, really. If we look to, you know, disregarding, I suppose, Germany and the Netherlands, if we look at France, the UK and Italy, we've seen a rise in right-wing candidates being elected. If we look to the UK, we see that with, of course, the Brexit Party with Nigel Farage, you know, making serious grounds in the European elections, securing, you know, the majority of the votes there. If we look to France, we've seen Marine Le Pen, the slightly more, you know, sort of right-wing candidate, you know, so making a surprise there against Emmanuel Macron, and you know, securing more votes than Macron in France. And then over to Italy as well, we had Salvini, again, an anti-EU right-wing candidate, securing the majority of the votes. So for me, that was quite interesting, that we're starting to see this anti-EU position start to increase throughout Europe and start to really gain traction. So I know this is, of course, only the European parliamentary elections, but if we are to see some consistency within the upcoming general elections for the respective countries, then we could see that anti-EU position reinforced, starting to build throughout Europe. So it was quite an interesting data release that took place there. Of course, guys, the big one moving forward is going to be the, I suppose, the general election when it does take place. Of course, Theresa May stepping down here in the UK, and the new Conservative party leader, they will elect that party leader. Of course, that leader will then be the Prime Minister of the United Kingdom, and then it's likely that we'll head into a general election shortly after that. But it has been interesting to see this anti-EU stance start to build and grow within Europe. So yesterday, guys, was a very quiet day. Of course, we had the bank holiday here in the UK, and of course, we had a bank holiday within the US as well. So Monday afternoon was a very quiet time within the markets, given that we only had the European market session running until 3-4 p.m. and then until 4 p.m. and then from there we didn't have any US market session open, so things got pretty slow in yesterday afternoon. Moving into today, we saw some good momentum coming back into the markets. We didn't have anything really major in the way of fundamentals. Tonight we do have the financial stability report for the Reserve Bank of New Zealand, and that is followed by a speech from Governor Orr. In addition to the speech, so this is a speech going over the content of the financial stability report. So a couple of hours later, we have a speech regarding the previous data. Moving into the early morning, we have the ANZ business confidence. This has been really disappointing. If we got the history for it, we can see over the past few months and into 2019, once again, it's been pretty bearish there for the New Zealand business confidence. And then again, this is followed again by Governor Orr addressing the market. So this time he's due to testify before the Parliament Select Committee about that financial stability report. So we're going to see a speech after the initial report, and then we will see Governor Orr testify before the Parliament Select Committee as well, where he could well be questioned on the ANZ business confidence if we continue to see some bearish figures there. If we continue to see these bearish figures, especially what we've seen over the past couple of months, then he may well be pulled up on that in that testifying to the Parliament Select Committee. So I think, guys, tonight is going to be pretty volatile for the New Zealand dollar. So, moving into the week ahead, I'm not looking to to plan anything on the New Zealand dollar. Moving into tomorrow afternoon, we have the rate statement from the Bank of Canada, accompanied with the overnight rate. We're not expecting any change there in the overnight rate. is expected to remain at 1.75%. I wouldn't expect to see the central bank lower that to 1.5%. I would expect it to remain at 1.75%, but I would expect in the rate statement for the bank to comment on the recent falling oil prices. You know, we've seen oil prices now tumbling down to around that $58 per barrel, falling several hundred ticks from the most recent highs. So I think you know, they might mention that the bank will remain accommodative if we start to see the bears continue to push prices down within crude oil. If we continue to see a bearish crude oil, we might see the bank state you know, that they're willing or that they will remain accommodative if oil prices continue to fall, maybe below $55 per barrel. So I wouldn't expect anything too major there. For me, if anything, it's going to be slightly dovish, opposed to being slightly hawkish. So, you know, we could see some selling off of the back of that. If we do see that that accommodative word, then it is likely that we will see the sellers come into the market and push prices lower. Moving into Thursday, in the early hours of Thursday, we have building approvals month on month for the Aussie dollar. These were absolutely dreadful for the previous month. And, you know, looking at April figures, you know, we've had a swing from 91.1% to negative 15.5%. And that is a huge, huge change. You know, in that data there. So we're expecting slightly more average figures for the building approvals, but ultimately, you know, they are struggling over in Australia, and the construction industry has been pretty poor. We were expecting a slight pickup, you know, as sort of, I suppose, a season, so what would be a cyclical event, so with the seasons now going into the cooler months, typically we tend to see an increase in instruction as workers are able to do more work without, you know, exhausting themselves in the you know, in the savage 45 degree heat in the summers. So, you know, we are seeing some difficulties there for the Australian economy, but I think if we see data coming out towards forecast, we could see some counter trend buying pressure coming back into the Aussie dollar. This is coupled with private capital expenditure quarter on quarter. We're expecting a drop from the previous figures, but you know, I think the previous figures were a slight anomaly, really. Saying that, apologies, looking at the figures, you know, these figures have been pretty inaccurate when they've come out. Previous figure at 1% revised up to 1.9. Previous figures at minus 0.2 revised up to 0.2. Previous figures previous figures 0.4 revised up to 1.2. Previous figures minus 2.5 revised up again, and the same story here. So, you know, it does paint quite a bleak picture there, but if we take a little look closer to the revised figures, it's not actually been too bad there for private capital expenditure, and we've, you know, really been coming in closer to forecast than it would first appear. So it's going to be a little bit uncertain there for the Australian dollar, I think. I've got an opportunity that I want to take a look at across the Euro Aussie, but this is only a short-term opportunity. So we'll take a look at it and If it meets the criteria and it looks as though that we can get in and out before this data on Thursday, on the early hours of Thursday morning, then fantastic. But we'll just bear that in mind moving forward. And then, guys, 3 o'clock in the morning, the annual budget release for the New Zealand dollar. So, you know, Wednesday and Thursday going to be some very volatile days for the New Zealand dollar there. So, you know, guys, please be cautious with that. Okay. So moving into Thursday afternoon, we have prelim GDP coming out quarter on quarter. Figures are expected to be fairly consistent from the previous figure. These were actually revised down again from 3.5% to 3.2%. So we're expecting a little bit of consistency there to come in with prelim GDP. Again, guys, you know, as I've mentioned with the US dollar, I want to start to see some real consistency coming through. And until I do start to see that consistency, I'm not looking to really plan any macro positions over the US dollar. So more data coming out Thursday afternoon for the Canadian dollar. So we have Government Council member Wilkins is addressing the market, and he's due to speak about Canadian and global economic developments, how they are impacted the recent interest rate decisions at the Calgary Chamber of Commerce. Audience questions are expected. So I would expect this to be fairly volatile for the Canadian dollar, actually. And let's take it back to Wednesday very quickly. When was it that they last changed their interest rate? It has been quite a while. So yeah, it's a little bit of a difficult one there. Unless we see anything major on Wednesday, I wouldn't really expect this to have any major implications elsewhere. So we should be all right there with the Canadian dollar. And then, guys, finally moving into Friday. Friday, last day of the month. So just dodged non-farm payroll this month, which is some good news. But we do have some GDP figures there month on month for the Canadian dollar. We have no forecast, but the figures previous were negative at minus 0.1%. So if we start to see some negative figures building, you know, over for this data release and over next month, it could, you know, we could see the Canadian economy pushed into a recession. So it'd be interesting to see what the figures come out here. But all in all, it looks like it could be quite a volatile week for the Canadian dollar moving forward. So, you know, gonna have to be quite careful there, I think, guys, with the Canadian dollar. So just to review the week quickly, the big ones for me, guys, are going to be the Canadian dollar overnight rate, the rate statement, and then the financial stability report and the speech afterwards for the New Zealand dollar. Apart from that, I think elsewhere we should be okay within the markets. It shouldn't be too volatile. So guys, do you have any questions about the fundamentals there? If you do have anything, just pop that into the group, and we can go through that quickly. If you don't have any questions, not to worry. We will take a look into the markets. Okay, fantastic. So, looking into this week ahead with the markets, for me, I was looking. I bet this is going to start to pull up now. It has, as US stocks are starting to fall a little bit. Now I'm starting to see this a little bit of buying pressure coming back into to the safe haven currencies. Starting to see the yen rally somewhat, and gold. Cool. That has been quite a sell-off there for US stocks, coming down to push these support levels. So for me, guys, looking to the week ahead, I think we have some good potential opportunities. For me, I'm waiting for silver to show some buying pressure coming back into the asset. The reason being is because over the shorter term, we had some fantastic price action taking place to the downside. The sellers firmly in control with these lower lows and these lower highs, pushing prices back down towards the support at that $14 price handle. Now, for me, on a macro basis, I'm still holding a long, a bullish perspective over 2019. So over real macro perspective, I'm expecting silver to appreciate over the coming year. And I think where it's taking us down towards this $14 price handle, I think there is really some exceptional opportunities to look to buy silver on a much longer term scale. So if we look to the lows at 1368, these are 1368. They are the lows since leading into the last financial crash throughout 2008. In the build up to that financial crash, 2008, 2009. We haven't seen prices low since then. So, if we were to break these lows, we would be be seeing prices at around a 10-year low on silver. Now, I'm not saying I expect silver to break these lows, given the current geopolitical situations. I wouldn't expect silver to go below $14 per barrel. So, $14 per barrel, $14 per ounce. So I think from a macro perspective, with the current price levels over silver, I think we have some great opportunities starting to build to look to take some macro long positions to the upside over silver. And although we saw that huge selling pressure come into the market today, a close above that 1440 price level, above that previous support level, and we could start to see prices start to move back to the upside. But for me, I really am holding out to see if we can see prices down to this $14. If we can see prices down at that $14 per ounce, then for myself, I would look to take a position around this area with a stop below that 1360s level, putting my stop below that 10-year low, given the current situation geopolitically. So I think there's some fantastic opportunities starting to present themselves, on a macro perspective within silver. But for me, we just have to be a little bit more patient and see if we can get that value down at that $14 per ounce. So for that reason, guys, I'm not going to look to set anything straight away on this. Okay, we're going to keep an eye on this over the next couple of weeks and see if prices for silver do get down to that $14 price handle. We're only talking about 35 more ticks to get down to that price level, and if we get down to that price level, we should be faced with some immense value down at this level. So moving forward with silver, we don't really have anything that we can place at the moment specifically, but it's just something that we're just going to keep an eye on. As mentioned, if we do see that pull back above 1440, I wouldn't be surprised to see some bullish market signals starting to take place, and then to see a move to the upside in silver. But as mentioned, I'm holding out for that value down at that $14 price level. I think if we have an opportunity to buy from there, I think that's going to provide us with immense value moving forward on a longer term. So I'll put an update in for silver, and what my thoughts are there. So that we are approaching a fantastic level of value with technically on silver at that $14 per ounce price level. We've seen some fantastic demand in from this level over the recent and over the more longer term as well. Down from the 1360s here in 2015, 2016, pushed right up to that 21 price level. So I think there's some good demand down from this $14 price level. Again, we've got that 1440 price level here from 2014. Some serious demand coming into the market there. There's an outrageous day there on silver. So in terms of value, I think if we get down there, it's going to be a position that we can look to, really hold long term. And it's, for me, it isn't going to be something that I'm going to look to place larger risk on. It's something that, we can look to place smaller risk on, because the potentials are so large over a longer term, a longer period of time. So for me, it wouldn't be something that I would look to risk maybe 1% or 0.5% on this position. Maybe I would be looking to look at a lower stake around maybe 0.2 or 0.25%. And then, from that level, I'd look to scale in over the longer term. So I think we're going to have some great opportunities moving forward on silver, but are they ready just yet? I think we need to be a little bit patient. So does anybody have any questions with silver there quickly? I am looking at another opportunity within the markets. So don't worry, that we don't have an opportunity there at the moment. Okay, fantastic. So the next opportunity was actually looking on this Euro Aussie short. I know we got burnt by this a couple of weeks back, looking for that supply level at that 162 price handle. We're a little bit premature on our entry, a little bit too we're a little bit too tight with our stop because we didn't really exceed that 162.50s resistance level, and we saw then prices fall back below that 162 supply, and it looks as now though that the sellers are finally in control and pushing prices lower. We have some good market signals taking place. So for me, I think there is a position that has arisen, and I think it is something that we can look to enter and exit before that data on Thursday. So for me, I am looking at a short position with the Euro Oz. So I would be looking for a short around that 161.50s at that previous intraday area of support. Let's take a look at this level on the hourly. So we can see that there's been some good support from this price level over the past few weeks. And then this provides us with a, we have a good technical swing at what price is that? At 161.87. But for me, it would be about utilizing that 162 at 162 supply once again. So yeah, so for me, I don't think, the fact that we got burned on this a couple of weeks ago was too major. We're starting to see price play out now as expected. We're starting to see the sellers come into the market and clearly overwhelm the buying pressure. We have that nice swing up towards that 161.90s. But for some slight extra security, I would look to put my stop above that 162 price handle. But I think we have some good opportunity moving forward. So what would I expect with this currency pair? Well, as you can see, we've come down to that support level at the 160-120s, and we're just consolidating over this price area. I would expect to see the buyers begin to push prices back up to that 161.50s over the Asian market session. I would expect this level to be met, and then to see the sellers come back into the market and then break these lows. So for me, I can't. Apologies, I can't move those once I put them in place. I keep forgetting that. There we go. So I'd expect prices just to clear that 161.50s, and then to see the sellers push prices below the previous support at 161.20. Maybe some consolidation and a slight retest before we see prices, continue down towards the that 160.60 price level. So I think there's some fantastic opportunity here for us to look to take a short position around that 161.50s with a stop above 160. Around 162 for this position, with an expectation of around 90 pips down to that 160.60 significant price level. So, this is something that we were looking at a few weeks ago, that we're finally now starting to see a clear market signal developing, over the price chart. So we've got the technicals that we can begin to take advantage of. So for me, I am going to look to what have we got at the moment. One moment, guys. Just going to take a very quick look. at the economic data coming in. Okay, I think I am going to wait for that financial stability report for the Reserve Bank of New Zealand. I think I'm going to wait for that to be released before I look to place this this pending order, because we could see a little bit of volatility follow through to the Australian dollar from this data with the New Zealand dollar. So I wouldn't want for us to you know, to place that order and then for major volatility to come through from that financial stability report for the New Zealand dollar, and then for us to you know, to be taken out of our trade position almost immediately. So I think we'll wait to you know, we'll wait to place this trade position, but we can get the technicals down now, you know, for what we're expecting. So what do we there we go. So I am looking for a sell limit over this pair. I'm looking for a sell limit at 161.50. My stop loss for this position, we're going to look to utilize that last swing towards 161.95. But we're just going to put it just above that level ever so slightly at that 162 that 162 supply level. And then our target, we're just going to take that just above that 160.60 significant price level. We're going to look to exit this at around 160.65, giving us around 85 pips potential for this trade position. So about 1.5, just over 1.5 R return from this trade position if it meets the expectation. So this is what I am looking for with the Euro Aussie moving forward for the week ahead. I would expect this to you know, for us to meet our entry and our exit before you know, that Aussie data on Thursday. You know, technically we're getting a clear market signal that sellers are now in control. You know, we've seen that's 162 supply level now pretty well rejected. So I'd expect to see prices move down to the next significant price area at 160.60. So guys, that's what I'm looking for with the week ahead. My main plays are with Euro Aussie short and silver long. I'm just waiting for silver long to mature a little bit and for it to get to my designated price level. If it gets to my designated price level, fantastic. You know, we can look to get that set up, but I think that might start. I think that might take a week or two for us to get down to that $14 price handle on silver. But when we do get there, we've got some fantastic long-term opportunity to take silver to the upside. So guys, do you have any questions on the positions that we have gone through this evening? Just pop a yes or a no in the box for me, please, guys. If you don't have any questions, fantastic. We can leave that there for this evening. But if you do have any questions, we can go through those before we finish up. I will pop a review of this this webinar into the groups, just in regards to the Euro Aussie, what we're expecting, and in regards to silver on a macro picture as well. So I'll keep you updated with that, guys. As mentioned, I'm just going to wait for that data to pass at 10 p.m. for the financial stability report. And to be honest, I'll probably wait for the dead zone to pass as well, and then we'll look to get that Euro Aussie placed. Okay, fantastic, guys. So if we don't have any questions, we will leave it here for this evening. I'll pop a message into the groups shortly with my expectations for the week ahead. If you do think of any questions, guys, between now, well, I suppose just after the webinar, just pop them in the group or give me a message privately and we can go through those questions together. I wish you all the best, guys. I wish you all a fantastic evening. Very well done this evening, guys. Thank you all for attending, and I will see you all back here next week, next Tuesday evening. Take care, guys, and goodbye for now.